Hello, this is Brad Harvey. Today we're going to talk about what has happened in the second quarter of 2021 and give you an overview of what has happened overall, not just in the markets. So we began the quarter in a little bit of turmoil, as you might remember, as we were emerging from the COVID crisis and things were beginning to open up and mask mandates were starting to come off and people were beginning to travel and go out to eat. And one of the themes that we noticed economically is that we had some supply chain problems. So manufacturing had certainly gotten a little bit behind, and so we had less supply, but increasing demand, and we all know that creates inflation, creates prices going up. We certainly saw quite a bit of that. The inflation number for 12 months ending the end of May, and that's the most current information that we have, was actually up 5%. That is a pretty big number so far. We actually expect that number to get bigger. But the supply chain hiccups seem to be getting a little bit better. However, there are other things that are not doing quite as well. So from a market standpoint, the overall equity market actually did very, very well. And the commodities market did pretty well. And the bond markets did pretty well. Well, I'm here to tell you that sometimes that's not a good thing because those correlations or the degree to which those things are moving together has increased. Sometimes that can make us a little bit uncomfortable. I don't like all investments moving together in lockstep. Well, right now, the domestic equity markets certainly have hit all-time highs or near highs recently. To run down some of the numbers, the S&P 500 during the second quarter actually posted a number of positive 9%, actually almost 10%. During the same time, the foreign indexes were a little more modest. They were up 4% or 3% for the emerging markets. Gold was actually up 4.3%, and overall commodities posted a big gain of approximately 14%. That's based on the Goldman Sachs Continuous Commodity Index. While at the same time, 10-year Treasury yields actually fell 18%. Now that may seem like a really big number. It really isn't. We went from 1.75%, give or take, to 1.431% overall on the 10-year Treasury yield. Now keep in mind, as yields go down, that means that bond values go up. It also means that stocks and some other investments may be relatively more enticing. But the reverse is also true. When interest rates go up dramatically, then that can potentially take money out of the stock markets as investors are seeking a safe cash flow rate of return. And then if we talk about other commodities, not just gold, not just commodities as a general group, but oil. Oil prices went up 27% in the second quarter. That's a big number, and we expect that to continue as we get into the summer driving season and as they're actually taking more and more supply and production offline for the future years. Then the last thing is real estate. We look at the REIT index. Overall, the REIT index for the second quarter was up 8.8%. So all in all, good news from a market standpoint. However, there are some other things going on that we certainly want to pay attention to as we get through and into the third quarter and the fourth quarter. Number one is unemployment. We still have some significant unemployment going on in this country. That unemployment has been improving, but as people come off of benefits and as the tourism industry and service industries open up and those employees go back to work, we do expect unemployment to fall. Now, one of the downsides of coming out of the COVID crisis is we have experienced massive government borrowing and spending. Well, at some point, we're liable to have to pay the piper. At the end of July, the debt ceiling is going to come into play. We're liable to see more and more conversations in the media about what is going on with the debt ceiling. As we know, overall, when we've hit up against these limits, the government has just increased the limits. But it's liable to create a little bit of uncertainty and some debate. So this is Brad Harvey. That was a 2021 second quarter market overview. Thank you for tuning in.